Hey guys, welcome back to Reserved Investments on YouTube. And yes, I have to do a video on this because I love when the subject matter of antiques and collectibles merges with business, economics, and finance. And it's all out there in the mainstream media. If you don't know what I'm alluding to, Fanatics is buying Topps trading card business for $500 million. Excellent article. Premiered on CNN Business. I am going to put a link to this particular article below. I'm also going to read this to you. I'm going to give you my take. And this article is by Paul R. LaMonica. And this pretty much just broke on January 4th, 2022. So this is breaking news at the moment. Now, before I get into my thoughts on this, I really have to take a step back. And I have to tell you why I like the fact that this is trending in the mainstream media right now. For those of you unaware, when I talk about collectible finance, I often talk about how different socioeconomic demographic groups view the antiques and collectibles trade. And what is it that I always tell you guys? It's very interesting to me how your average collector, your average speculator, your average person that just has an emotional attachment to a lot of these items views the overall antiques and collectibles trade and also the business of antiques and collectibles. Now that is in contrast to somebody who is a sophisticated, wealthy investor who is either educated in economics, business, and finance, and also maybe the antiques and collectibles trade, but also looks at this more of a business than that of something they have an emotional attachment to. Well, why is this important? Because if you look at the way these two different groups invest in the antiques and collectibles trade, they fundamentally do it opposite almost. You have the average person that just has an emotional attachment to this stuff. Maybe they consider themselves a speculator, a small-time dealer, somebody who is just learning the investment end of the trade. They're going out and they're buying these items that they have an emotional attachment to. And in certain cases, they're calling it a quote-unquote investment. Meanwhile, a lot of these Wall Street bros, these finance guys, they're looking at what's happening in this market, especially in the year 2022, where all these collectible markets are on fire. We're in a bull market across the trade, whether we're talking about antiques and collectibles for the most part. They're looking at these markets and they're going, instead of buying the quote-unquote rare item that people are going to be bidding up on Heritage or Hakes or Morphy's auctions or Sotheby's or Christie's, what if I could own a business that controls either the manufacture or the buying and or selling and or condition grading of those antiques and collectibles that are now in a bull market? And I don't think a lot of people realize the differences in just financial mentality between those two viewpoints and how they contrast and they also conflict with a lot of the people out there that are just going through life going, you know what, I'm attached to comic books, or I have an emotional attachment to video games or Pokemon cards or rare coins or antiques or vintage advertising, or in this case, sports memorabilia, whatever it happens to be. And I just want to own it. I want to quote unquote invest in it. It's very interesting how these different groups go about investing in these markets predominantly differently. And that's what I want to focus on as I read this article to you guys. And that's the perspective that I bring to this article. Because a lot of people are Facebook messaging me, they're emailing me, they're texting me, those that have my personal text number, and they're telling me, hey, Sean, this is how I view this particular market development. I just want your feedback because this is how I'm viewing it. And don't get me wrong, I have some great discussions with a lot of you out there in regards to this. But overall, the amount of understanding that is predominantly needed to really digest this is really on the investment side of the trade. It's not coming from the people that have a strict emotional attachment to this. And make no mistake, there's nothing wrong with that. Remember, guys, this is a collectible finance channel. And I say that in almost every video now because I do get my share of people. They turn on this particular YouTube channel and they think it's going to be a hype-driven YouTube channel. Like I was watching one the other day. Hey, you better go out and you better buy these 10 or 12 Nintendo Switch RPG games before they're pulled from store shelves. You're never going to be able to get them again. And I just roll my eyes when I see content like that because really, in all honesty, I understand why that content creator is creating that type of catchy content because apparently that video got like 10 or 12,000 views from what I saw. But overall, I don't think that people understand why that happens. What's the psychology of investing in these items? Whether you're a sophisticated investor, like the people that are involved in Fanatics buying Topps trading card business for $500 million, or you're somebody who just wants to enjoy a lot of these collectibles and you hope that they go up in value because you are putting your hard-earned money into these markets. So that's very fascinating for someone like me. That's why I always get excited when I see these articles. So without further ado, we're going to jump right in. I'm going to read this article and I'm going to give you my take. If you can't beat them, get bought by them. Trading card giant Topps, just a few months after losing out on a deal to renew its longtime licensing deal with Major League Baseball to sports apparel startup Fanatics, is now selling its collectibles and card business to Fanatics. Sources close to the deal told CNN Business that Fanatics was paying $500 million for the more than 80-year-old Topps, which started out as a chewing gum company in 1938 and began selling baseball cards in 1951. Fanatics had been set to become the exclusive trading cards licensee for Major League Baseball in 2025, when Topps' deal with the league was set to expire. But Fanatics said Tuesday that as a result of the Topps acquisition, it will immediately begin to design, manufacture, and distribute baseball cards. You know, guys, this really reminds me of what happened back in the mid to late 1980s, early 1990s, with the hype, with all the enthusiasm for not only trading cards, not only sports cards, not only baseball cards, but also modern era comic books and the like. And I really think we're on the cusp of literally repeating what occurred back in the 80s and 90s with a lot of these markets. I'm not saying they're going to crash or they're going to go belly up or it's all going to go in that direction again. But it really seems to me that we're almost getting to that point again. I feel it. The enthusiasm, the interest from speculators, collectors, investors, and just dealers is there. It's been there, it's been building, and here we are in the year 2022. So going on with the article. Fanatics has clear aspirations to become a giant of the sports business world. The company fortuitously opened a new store in Los Angeles in May that focuses on apparel for the popular Paris Saint-Germain soccer club, which lured legend Lionel Messi away from Barcelona several months later. Fanatics struck a 10-year merchandise deal with PSG in 2020. The core Fanatics retail business is valued at $18 billion, based on its most recent round of financing last August. A source close to Fanatics told CNN Business at the time the company raised $325 million from various investors, including rapper, music mogul Jay-Z, awesome guy, Major League Baseball, and venture capital firm Silver Lake. Sources close to the company said Tuesday that Fanatics' expanding trading card business is now valued at more than $10 billion and that its Candy Digital NFT unit is worth about $1.5 billion. That implies a total valuation for all of Fanatics' businesses at around $30 billion, guys. This is monumental. Fanatics is one of several private unicorns expected to go public sometime in 2022, meaning this year. Let me read that again. Fanatics is one of several private unicorns expected to go public sometime in 2022, which means they're going to be selling stock on the exchanges. With trading cards and collectibles being a significant pillar of our long-term plans to become the leading digital sports platform, we are excited to add a leading trading cards company to build out our business, said Fanatics CEO Michael Rubin in a statement Tuesday. Topps is currently owned by Tornante Company, which is run by former Disney CEO Michael Eisner and private equity firm Madison Dearborn Partners. Topps was planning to go public through a merger with blank check firm Merdrick Capital Acquisition Corporation, or MUDS, last year. But the trading card icon spiked the planned $1.3 billion transaction after Fanatics announced its new deal with the Major League Baseball. Toronto and Madison Dearborn are holding on to Topps candy and gift card businesses and rebranding as the Bazooka Companies after the company's famous chewing gum. So Topps is still going to be existing even after this sale goes through. They're just going to be rebranding the businesses that are left as Bazooka Companies. For those unaware, Bazooka Joe, Bazooka Bubblegum, they also were owned by Topps. Like any crown jewel, I and my partners at Madison Dearborn will miss our many years of ownership where we grew a highly profitable business through strategic licensing partnerships, global expansion, and digital transformation, Eisner said in a statement. We're proud of what the Topps team has accomplished. That is the end of the article. Now, again, to give you my thoughts, I think this is great news. I think it brings a lot of excitement and enthusiasm into the trade. I just want you guys to pay attention, though, how people with means invest in the antiques and collectibles trade versus that of the average individual. And I know some of you out there are going to be hypocritical of that statement because a lot of you are probably going to, willingly so and rightfully so, think that some of these major corporations, when they take over a company like this, they sometimes make bad business decisions based on short-term profits at the expense of the long-term viability of the brand. And if you don't know what I mean by that, all is what I'm saying is usually when Wall Street gets involved in a lot of these companies, they run them into the ground because usually they're looking at short-term profits and greed over the long-term longevity of the business as a whole. And I agree with you in that assessment, but I will tell you, if we look at other companies, Nintendo's publicly traded. If we look at a company like even Hasbro, which owns Magic the Gathering, they're publicly traded. And in my opinion, both Nintendo and Hasbro do a very good job at the companies and the conglomerates that they control. So I will state that. So we're going to see how this turns out. I would like to hear your feedback in the comment section below. Please let me know what you think of this acquisition. And more importantly, are we going back to the 80s and 90s in the overall enthusiasm that is occurring in the antiques and collectibles trade as we venture further into the great unknown known as the year 2022? Let me know your thoughts. Thanks for watching. Have a great night. I'll see you in the next video.